And if they won't look you in the eye when you're negotiating, maybe they're lying.
How do you decide when is the right time to sell?
So you can uncover what they don't know from a psychological standpoint, from a conversion rate standpoint, and see that this product may be worth more if I can do it right than what they've been doing, just because they don't think about some of these little bitty things.
Slow sustained growth is boring, but it makes me happy. Everyone can manipulate a graph, but you can't manipulate a login.
There are many people doing a poor job that always makes it easy for the rest of us to make money.
You can get Facebook groups that you spend money advertising to get members in, gets banned.
I've paid much more for this than my college education. There have been a lot of hacking issues that are coming from a server level, because if you follow some of the gurus online, they may or may not know what they're doing.
Why is that person selling the business? I don't want to see spiky growth. I like just consistent, maybe 10, 15% annual growth.
What do I have more of it, money or time?
So there's half your income gone in one email. It's just real estate made from magic ones and zeros. The potential for growth that you're going to get from digital assets is a lot bigger than traditional real world assets. Exciting times, to be honest. The valuations of certain asset classes are still rising.
Wondering which domains are winning right now? Now you don't have to wonder, nor do the work to find out. We research, test, and identify the trends for you before they peak. New release every week. Limited inventory. Subscribe to Odys Trends now. Hello, everyone. Welcome back to Odys Podcast. My name is Aneta Samkov, and today I'm hosting Gareth Hoyle and Glen Ingram. Welcome.
Thank you.
Thank you for having us.
Thank you so much for coming. So we're here today to talk about the digital assets. And I wanted to start with, how would you characterize the current state of digital assets? What's happening?
Exciting times, to be honest. The valuations of certain asset classes are still rising. I do a lot of digital due diligence, and I'm seeing a lot of VCs and finance moving away from traditional assets into digital investments.
Oh, okay.
So I think the multiples and the potential for growth that you're going to get from digital assets is a lot bigger than traditional real world assets. Not that it doesn't come with risk, but yeah, I think it's exciting times.
Awesome.
Yeah, I come from a real estate background, and so I've owned a lot of homes and property in the U.S., and so I look at it from the same type of thing. Are you looking down the road 5 months, 5 years, 10 years down the road, and making sure you're making intelligent acquisitions, something that you can get a good return on your investment from? I think as long as you do it, your due diligence, like you just mentioned, and are prepared for it, you can get a great outcome.
Awesome. So for someone just starting, what types of digital assets can you actually buy?
Websites, currency, Facebook groups, aged accounts, aged domains, everything really. It's just real estate made from magic ones and zeros. That's the only difference. If you're going to start out and you're looking to acquire some digital assets, starting something that you're interested in the real world. That way you're going to be more motivated to try and to keep trying rather than doing something you don't understand.
Well, and I think as anything in life, when you're getting started, you have to look at it. What do I have more of it, money or time? If you have more time, you can buy something less expensive and put some sweat equity into it to build it up. And then as you start developing more assets, you can start investing a little bit more, so you're doing less work to get there. So you just have to look at, what do I have more of at this stage of my life or my career?
I think many people would say that FBA sites are probably overrated at the moment. I think Google is no longer liking affiliates even more than usual. So I think the valuations of what people were expecting to get for their websites is a lot less. But I also think that there's more value in building your own communities rather than living on rented real estate on Google.
I mean, with FBA, you're building a revenue stream or a business based on something that someone else owns. So when Amazon wants to change commissions, when they want to change their platform and stuff like this, you don't own that. So that's the one thing I like about digital properties, websites and stuff like that, is I own this piece of property. I can do with it what I want, and I can change things. I can make mistakes. I can make good decisions, but still it's mine. It's not a Facebook page, a Facebook group, an Instagram page. All these things are great parts of a business. But if you're wholly dependent on one form for revenue and that goes away, I've seen a lot of people go from heroes to zeros really quickly.
So is that something people should avoid if they knew the digital assets?
I don't think avoid, just approach with caution and build your email list.
Yes.
Is always my advice. Build your email list. That is your asset. Like Glen said, Facebook group is rented. They changed the algorithm, so now you get very little organic visibility.
Yes.
A couple of years ago, Amazon halved the commissions that they were paying. So there's half your income gone in one email.
Yeah.
There are search engine software companies that used to pay lifetime commission for affiliate. They changed to a one-off payment. Like you become reliant on that income stream that isn't yours anyway. Whereas if you have your own lists, you can build your own communities, you're in control. And I think that's where the real value is.
Well, I think a lot of that realization has really changed when you're selling a digital property. Now they're looking for multiple streams of revenue. So if you're just dependent on one stream of revenue, your multiple is a lot less of what you can make from selling a property versus if you have multiple ways to sustain that revenue for the next owner.
So where do you source for digital assets?
It depends on what the asset is. Marketplaces. If I'm looking for domains, we can go to Odys, obviously.
Yeah.
I buy and sell Facebook groups. So there are, ironically, Facebook groups to buy and sell Facebook groups.
Wow.
Conferences, you find people that are buying and selling stuff, and everywhere. The same as in the real world, you would go to the market. We just go to the digital market, really.
Yeah. Like you don't buy all your clothes at one place. You don't buy your shoes at one place.
Yeah.
So the more you can diversify, the more you can have other outlets, because you may be looking for something in this niche that you may have to go to 5 or 10 places to find that one. So if you're limited on where you're buying stuff, you're limited on what access, which ones you can acquire, which assets.
So can you walk us through your due diligence process for?
Yeah, I mean, this is one of my favorite areas because I'm nosy. So I'm looking at the age. So if it's a community that has been around for 6 weeks, it's worth 0 to me. Whereas if we can see consistent growth for many years, I don't want to see spiky growth. I like just consistent, maybe 10-15% annual growth from the asset, which just means that it's sustainable. Like Glen said, multiple revenue streams. Like if everything is just coming from Google organic and everything is just being pushed to Amazon, I'm out. Like that is not, to me, that is a risky asset, really. Nothing wrong with organic visibility, but what's powering it? Because what if I buy the asset and then somebody turns off all the 301s that are powering the rankings? I'd also be looking at the supply chain downstream. So where are you sourcing the products from? I like a lot of e-commerce, but if I buy the website, do I also buy the supplier relationships? Because it's all very well if I buy on a website selling blue widgets, but if I can no longer buy the blue widgets at the price required to sell them, then I wasted my money.
Yes.
So that's a quick 1-minute overview of how I would look at stuff.
Well, and you have to look at world politics and world economy. So, I mean, there are a lot of businesses over here right now in Vietnam that 6 years ago were probably predominantly in China, but then we have new tariffs coming in. It looks like we may be having new tariffs on China again. So if you're basing your business off of one country to produce products from you, and all of a sudden your price, if you're shipping in the US, is going to go up 5, 10, 15%, that's coming out of your margin. So you have to look at it from a global aspect, I think, and really make sure that you can buy products maybe from more than one place. So as politics change globally, you're prepared for that. Otherwise, you're going to be like a lot of people that aren't in business anymore.
So you have to be careful. And what would you recommend for someone starting in and trying to, let's say, buy a website? Like, what to be worried about? Because, there are ways to pump the statistics up.
Yeah, everything has a history.
Yeah.
And the beautiful thing about digital assets is that history is traceable. So You can buy a house, maybe somebody is murdered in the basement, you would never know.
No.
But you can go to Wayback Machine and see exactly what has been on that website since the first time it was registered. So I think you just have to really get under the hood and look at the background of the business, because these are digital asset is a business. It's just a business. So that's the beauty of it, is that you can see what's been happening in the past, and even looking at visibility. Like if the visibility is up and down as the domain drops, then like, why did it drop? Why did the business fail? So yeah, I just do your research.
Well, and if you're newish, you better come to somebody that's been doing this for a while and beg them to intern, ask them to work for free. Because if you follow some of the gurus online, they may or may not know what they're doing. And you may end up buying URLs that you're just going to buy a piece of property that you're going to sell at some point because it's completely worthless. If you don't know how to look at these things, if you don't know how to do your research properly, it's easy to be misled sometimes. There are a lot of them you'll see with false structure or false data, false stature, if you will, or ratings. That when you dig into them, you realize, this isn't going to work like this. It looks good on a piece of paper, or looks good when you're on an auction site, but when you dig into what's really going to sustain that, it's completely different. So you need to learn from someone that's been doing it for a while in any way that you can.
That's a good point.
I always think, why is that person selling the business? If it's a good asset, like I accumulate assets, not sell assets. The only time I sell assets is if I'm done with it. Why am I done with it? Why is that person selling the asset? Is the business model failing? Is it changing? Maybe they're bored. We all have a habit of buying domains that we never fulfill the project. But I would also, why is the asset for sale? Like, that is the number one question you should ask early in the due diligence process.
That's a good question. But like, how can you see the history of a Facebook group, for example?
Ideally, the owner of the Facebook group would make you a temporary admin. You can sign NDAs and do the paperwork. You can then go into the insights. So you can see over time the number of members on a weekly basis. So if the group is getting 5 members per week, then 100,000 members, then back down to 5, maybe that's not a good asset. Whereas this, again, like for me, I'm boring. I just like 15 to 20% annual growth, sustainability. But the platforms do give you limited information. You're never going to get sort of the level of detail that Google Analytics would give you on your own website. But Facebook, as a group admin, you can get a lot of information out, whether it's demographics, whether it's location, engagement. But also the beauty of digital assets on Facebook, join the group, scroll down a few posts, see what people are talking about, see how many, 100 posts, but nobody's commented. Like, that's not a very engaged group. So that lowers the value.
Yeah, anytime you see spiked data, it's usually a red flag.
Okay. Any other red flags?
1 million of them. It just depends on, again, what you're doing. Again, how many members of a group, how many people are active, how many people are engaged, different things like this. How often are they posting? Do you get 1 response, 10 responses from this? It's just so many different metrics you need to look at depending on the property and what you're doing. And the only way you learn those is by experience and making a lot of mistakes. So you're going to make mistakes at the beginning, try and fail faster than the other people, make your mistakes for less money, and again, try and find someone that will mentor you.
So are there any aspects of digital infrastructure that actually can diminish or devalue your asset post-purchase?
I mean, rented links. Like, we see a lot of stuff like you can inflate the value of the if the value is based on the visibility, and I know I'm going to sell an asset, you can spend 6 months renting links, 301ing domains in, get the visibility up. As soon as you sell the asset, not your problem anymore. You turn off the visibility. Like, that's the risk that you have. But again, the risk of sounding the same message, hire someone that knows what they're doing, hire a due diligence expert. Like, you are better off paying myself or Glenn $5,000 instead of spending $50,000 on an asset that is going to go bad on you straight away. Like sometimes the best money you can spend is to find out, is this a good way of spending my money?
Well, and something that we've encountered a lot the last couple of years is someone may be selling it because they're tired of being hacked. There have been a lot of hacking issues that are coming from a server level. So the level of service you get from servers now compared to 10 years ago is just abysmal, but it's just the industry we live in. So if someone's selling this because they're tired of fighting a hacker that's left some code in their database, that every 3-4 months they're dealing with this stuff and spending a lot of money on this that you don't see from just looking at a snapshot. So the more you can dig into where's the hosting, doing a reverse IP lookup to see is there any porn, any different things like that on the same server, because typically that's where you're going to see sites that are on a bad neighborhood and a bad server getting hacked more than ones that are on a clean server. So it's just little bitty I's you have to look at, little bitty T's you have to cross. And the only way you learn those is by getting burnt in the past.
Learn from experience.
Yes. You pay a lot for this knowledge. I've paid much more for this than my college education.
Really?
Yes.
Wow. And how long have you been investing in digital assets?
I've had my own company for 15 years, so I've been around it for about 20 now.
Wow.
Yeah, it's 17. I've been running my agency for around 17 years, buying and selling digital assets for the same. Like whether it's a domain name, whether it's an established website, whether it's like social media communities, social media accounts, it's just part of the job.
But I think some of the interesting points that come up is sometimes, I have a slight buying disorder. If I buy something that I think will be cool, I use maybe 20% of them, but some of them sit out there until I need them. Every once in a while, probably at least once a quarter, I get an email. Would you consider selling this? And I look at it and think, I'm probably not going to use it for next year. Why? What would you offer me? And it's amazing what the value of something is to somebody else versus what it is to me. And if they love it more than I need it, here you go.
So can you share any of your early mistakes?
I bought a ton of URLs that by looking at this guru, what he said you should buy it, go out and I buy them. And then you get looking at down the road and you realize, this wasn't worth $10 and I spent $100, $500, $1,000 on things. So that's I think the biggest thing to keep an eye out in our industry is a lot of times the people that are speaking the most aren't really doing it. Someone behind the scenes is doing it for them, but they're good at talking in front of a camera. And so they're saying a lot of good things and they really don't know their backside from a hole in the ground.
So trusting gurus.
Yes.
Yeah, I don't make courses. I find that not everybody, but a lot of people that make courses are good at telling you what to do. I'm busy doing it.
Yeah.
So why would I give away 17 years of knowledge for $99 course? I mean, you could get 100,000 subscribers, obviously, and make some good money.
Yeah.
But it just devalues my knowledge, I think. So, I mean, I've made many mistakes. Not turning on auto renew for domains. And then somebody catches the drop and I have to buy it back for 50x what it would have cost me.
No.
So life. You can get Facebook groups that you spend money advertising to get members in, gets banned. Nothing you can do. Like there is no human being that you can call. It's gone. Move on. No point crying because nobody's coming to help you. So, well, this again goes back to the rented space.
Yes.
Like it's not your asset. You are just borrowing some of that community. So, whereas again, my email list is mine.
Yes.
Yeah.
So you use those tools to build up what you need, and understanding that at some point I don't want to be dependent upon them. So the bigger you can build up a group and you have a list where you can contact them, whether it be text messages, emails, you want multiple ways to contact the people that you're in your ecosphere, if you will. That way, should one source go away, you have ways and you haven't just spent a lot of money building something that's just gone.
Yeah, you can diversify, right? What are your favorite diversification strategies?
I mean, I have a bit of everything, I suppose. Crypto stuff, domains, aged accounts, real world assets. We talk about digital assets all the time, but my gold coins will never go to zero.
Yeah.
So unless we pull an asteroid in from out of space and it's made of gold, but yeah, just have a little bit of everything. In the same way we talk about revenue streams to your website, like have many different. So if you think about the EEAT signals that Google's looking for now, like if you have a website, it's kind of expected that there's some kind of social presence around it. So build your group, funnel the traffic to the website, build your lists, funnel the traffic to the website, build your content hubs, funnel the traffic to the website. So,
well, and I think I hear that you're this word branding, and you always hear branding because it's something that people can spend a lot of money on when they really don't know what they're doing to provide services. But I look at that as that's how you brand anything in the world this day. When you look at a web address, if you don't have your Facebook page, your Instagram page, all your different things like this, that every business that's opening up a building over here, if there's an office building next door and you're having someone open up a chiropractic office, an attorney's office, they're going to do these things because that's what you do when you open a business. If you don't do the same thing for every digital property, that's kind of a red flag.
So how do you evaluate the websites, for example? What's the first thing do you do?
do you want to do it first?
It depends on where I'm at on my toolbar of my computer. Because again, as we're coming into this and some stuff I'm going to be doing for my speaking this week, it's like I hit 1, 3, 5, and 7. And it's like, what tool was this? You know, you just kind of do it on autopilot. And a lot of the tools where I'm going through and doing research on these, I already have my parameters built into them that I've been using for years. So I really had to go through and look at trust, look at age, look at how many traffic, the traffic that I'm going to it, stuff like this, that it's very important. But when you've been doing it for so long, you just have things set on autopilot. You have to go back and say, why was I doing this? Oh, that's right. So it's just looking at, Wayback Machine is huge. When you're looking at that to say, okay, I see some bad links, but you're going to have bad links on any site that has any type of link structure, link volume, and stuff like that. So when someone gets freaked out because they have a link from a porn site, a link from a casino, Nike has that. ESPN has that. So those aren't killers, but I want to know, what did Google think this site was about? And has Google given it a different opinion of what they thought it was about in the past? So when you can go back and look at tools that are give you a 3-year or 5-year history, then you can look at it and make a better educated guess.
And when you see such red flags, are you sometimes like thinking about, I'm gonna negotiate that asset maybe down, buy it and fix it? Or
Depends whether I'm on the buyer's side or the seller's side.
if you're the buyer, if
if I'm the buyer,
of
course. Like you're looking for negotiation hooks to save some money. But again, if an asset is so bad, you can sell it me for $1, I'm still wasting $1.
Yeah, obviously there is a limit to how much you can fix. But do you see any assets that have like relatively for you easy fixes that not necessarily other people see that you can take advantage of?
Unloved. Like you can, again, if we use a real estate example, you can find a broken down house that you just need to refurbish. You can find a website where maybe the owner just lost interest. You can reinvigorate that asset. You can refresh the content, build some links, do some PR, build some branding around it. So there's always somebody else's failure is my future success. So.
Well, and when you've been doing this for a while, you make relationships. You get to know people. And there are people that we're friends with that have gone down the rabbit's hole with every Google algorithm and things like this. So you get to understand as the algorithms change, did they just have bad content? Did they not understand website architecture? Is all this stuff out here good, but they don't know that this part's bad that I can fix quick and have it shoot back up again in 30 days. So it's trying to find where the weaknesses are, and do they understand the weakness? Because if they don't understand the weakness, now I have more negotiating power. So it's understanding what the problem was and how quickly I can fix it.
And do you invest globally in different markets, meaning like non-English speaking?
For me, UK and US. Like there's plenty of work and traffic and everything that I need in the UK and the US markets like that.
Yeah, and it's just too much of a pain in the butt to try and do content in different languages. We've done that in the past, and the juice hasn't been worth the squeeze. It's taking us more time for people to go through and learn something they don't know. It's just easier to make money where you can make money.
Okay, which you're familiar with.
Yes.
Mhm. There is still space. It's not oversaturated yet.
No.
No.
There are many people doing a poor job that always makes it easy for the rest of us to make money.
Really? Oh, wow. So, what are the most common mistakes you see the investors doing?
No due diligence, being distracted by a shiny object. You know, sometimes they think it's a 5 or 6 digit .com domain. This must be worth $100,000. In reality, it's so tarnished behind the scenes. Like, you can get domains banned on Facebook. So when it gets shared on social media platforms, it won't show. It's like shadow banned. Some stuff, especially with the helpful content update stuff that we've had, I've seen sites, they're not coming back. Like, even if you started again, like, that domain is trash, basically.
Well, I think sometimes there are reasons why there are brokers out here that sell these properties that are doing a good job. They've been around for a long time. So letting somebody do some due diligence before it even gets to you, I think isn't a bad thing, especially if you don't know what you're doing. You're better off working with people that have knowledge in the industry, have knowledge in the field, so that you're buying a property that you have less problems, less skeletons in the closet, if you will.
So let's talk about the seller's perspective. How do you prepare the digital asset for sale, and how do you market it?
You need data. You need money for that, because I'm an accountant by education. If you can't show me what it's done historically, year over year, I'm not even going to talk to you.
Yeah, I mean, there should be a pitch deck.
Mm-hmm.
You know, you should be able to give access to Search Console. You should be able to give access to the Shopify backend. Like, if you're wherever the revenue, wherever the money is coming out of the asset, I want to have a look there. And that's what I would be preparing. But not only, everyone can manipulate a graph, but you can't manipulate a login. So if I'm selling, I consider myself a good person. I would only sell a legitimate asset. I have nothing to hide. Like, and a lot of the assets I buy and sell are to people that know what they're doing. So I expect people to say to me, give me the login, show me this, give me a report from this, download the PDF. I'd rather have CSV file, if I'm honest, than the PDF. I can do stuff with a CSV file. But yeah, like, if it's a legitimate sale off a trusted vendor, then why would you? There's nothing to hide.
Well, and if you're not buying it from there, I mean, this is a small world we live in and work in. I mean, it takes a few groups just to do look for a name, and you realize if someone's been shady in the past, sometimes zebras don't change their stripes, so you don't buy from that person.
It's amazing what a Google search of someone's name will reveal.
So how do you actually value a website, let's say from the seller, if you're a seller, like how to go about the valuation?
What's coming out the other end?
Yeah.
So if the beauty of digital assets is we can still get 25x, whereas valuing a digital agency, you're maybe getting 4 to 8x EBITDA, dependent on the revenue figures. Whereas digital assets, there's a much higher ceiling of growth. So I'm looking at what is the potential life cycle of the product. So, example, my kids used to have fidget spinners. They were the in thing for a few years. Now are they popular? I had a client during COVID that sold face masks. His value went skyrocketing. What's it worth now? In Asia, probably quite a lot. In Europe, we don't wear masks anymore. So, what is the likelihood of that business existing in 6 months, 6 years, 60 years?
Yeah, we're back to what you mentioned before. Nice, slow, sustained growth. When you have big spikes, can that spike be repeatable? Sometimes yes, most times probably not.
Okay.
Slow, sustained growth is boring, but it makes me happy.
Boring but reliable.
Absolutely. I can forecast and plan my own life based on the fact that I think I'm going to have 15 to 20% consistent growth for forever. No reason why it can't be forever. And I think another way on the valuation side is take away the primary traffic source, is that business still legit? And if the answer is no, then it's a worthless asset, really.
Okay.
Well, and sometimes, especially if you're on the buyer side, it's doing your due diligence, getting to know who you're buying it from, and having access to them, because a lot of people don't know what they don't know.
Yeah.
Related with this, I was just in a project where we were working with a company that sold home goods, linens, and stuff like that. And I knew the answer before I asked, but 9 times out of 10, if you've been this while, you know why to ask the question. And so I said, "Who's the primary buyer?" It was females because it was the home goods type of thing. And the owner said, "I don't know." Okay, you don't know what your product's worth? That's a good one to buy from, because as soon as we change the verbiage from unisex to conversion phrases for women, stuff like this, sales went up 10% the next month.
Wow.
So you can uncover what they don't know from a psychological standpoint, from a conversion rate standpoint, and see that this product may be worth more if I can do it right than what they've been doing, just because they don't think about some of these little bitty things.
Yes. So what are your favorite questions to ask the owners to uncover that hidden potential?
It depends on the property and the project. I mean, they're all going to have different things depending on if it's a retail, if it's a group, if it's something like that. I mean, I don't.
Can you give us an example? Another example.
I want to know why they're selling.
Yeah.
Like that is, I know I said it before, that is so important to me. Like, are you bored? That's fine. Brilliant. Like, I'm not bored. I can take it on. Has your supplier just gone bust? So now you have this website, this asset, but you can't source the materials anymore. That's a problem. Because now I need to go and try and build my own supply chain. Maybe that supply chain isn't in the country or the language that I live in. That's a pain in the ass. So, yeah.
Well, and I think here's a good example. When I was, someone came to me because they were sued from another angle here about 3 years ago, and they had purchased a website from a company that was big into like the plants and gardening niche, and they wanted to turn it into a thing where they're just going to sell and get affiliates. Well, that died 2 years ago. So this site that they probably paid $100,000 for 2 years ago isn't worth $5,000 now. But if you can find a way to repurpose that and find a way to actually start to monetize it again, that could be a good value. Because these people really didn't understand digital when they got into it. They got into it because they saw a revenue stream based on traffic. When that traffic goes away, you better know how to do something different. Otherwise, you're sitting with a piece of property that's just a paperweight.
Like most NFTs.
Yes, like most NFTs. Exactly. So how do you decide when is the right time to sell?
Whenever you have somebody with enough money to pay what you want.
Yeah. Everything is for sale. It just depends on the ceiling price, really. Or many people in this industry have ADHD. We get bored. Like there's, sometimes I sell stuff not at its peak value just because I'm done. Like I'm ready to move on to my next shiny item, and I'll just cash in my chips and push them into a different asset.
Well, and I think what's kind of fun with that is all of a sudden you'll see someone that'll come back to you and maybe a little bit smug in their way of saying it. It's here, and now I've got it, and it's up here. I'm happy for you. I got what I wanted out of it. Now you take it to your level. There's nothing wrong with you making it better than what I was, because I was done with it. I was bored. So I'm happy for that when that happens. It's interesting when they're kind of smug and then you say, "I'm happy for you," and it just takes the steam out of them because they wanted to tell you they did a better job than you. It's like, I don't care. I'm happy. Good for you.
I try not to look back.
Yeah.
Once I've sold the asset, it's gone.
done.
Like I cashed out at the amount I was happy with. Yeah. Like you say, if you want to grow it, you can 5x it, 10x it. Well done.
Yeah.
But I don't go back to my exes.
No. Exactly.
So actually, how do you negotiate? What are the good ways to negotiate from the seller's perspective, from the buyer's perspective? How to go about negotiations?
Sales is sales. It's about asking questions and getting to know who is on the other side of the table from you. Back in my early career, I was lucky to go. There was a place in Hollywood called the Dr. Karras School of Effective Negotiating. He was big into space products, aeronautics, and stuff like that. And the one thing they taught you is you never know how much negotiating power you have to the person you're talking to, because you don't know what's pressuring them.
Yes.
This was a great example. One time I given a piece of paper that if I don't buy this big piece of heavy equipment from him tomorrow, I lose $1 million contract. What I don't know is if he doesn't sell that piece of equipment today, he's going to go bankrupt. So we're negotiating our tails off without knowing what's motivating the other individual. So the better you can talk, the better you can do research, the more tools you're going to have to be able to do better at negotiating, or hopefully they give up something that they're not trying to. So you know that they're more desperate or that they want something more than you want to sell it for.
It's psychology. I mean, doesn't matter whether it's a real world asset or a digital asset. It's a human selling to a human. Generally, I'm sure AI is now selling to AI, and who knows. But you don't know what pressures people are under. You don't know. I mean, it's talking, it's asking questions, it's subliminal messages that you're trying to just extract that little piece of information. You can drop the negotiation by 10,000 or raise by 10,000. I work a lot for buyers and sellers, so sometimes my job is to inflate the price, sometimes my job is to deflate the price. So it depends who's paying me.
Yeah, it's like psychologists like it. When they ask that question and you see them swallow a little bit, you know that maybe you hit a little bit harder, closer to home than they wanted you to. So yeah, it's just trying to read body language and find out where you can push one way or the other.
And if they won't look you in the eye when you're negotiating, maybe they're lying.
But how often do you actually get to talk to these people, or is it most of the time that you deal with an agent?
Depends on the value of the asset. I mean, if it's a $100 domain name on GoDaddy auctions,
Sure.
nothing. If it's $50,000 domain name on Odys, maybe I want to email you guys and find out who's selling this. Can I email them? Can I get on a call? Again, it comes back to legitimacy. If I'm selling an asset and it's an honest sale, I'm happy to join you on a call. Like you wouldn't, well, maybe you would buy a house without seeing it, but I wouldn't.
It depends on the price point.
Yeah.
Lower the price point, the less secure you need to be. The higher the price point,
less
the more due
risk.
diligence you better do.
Like we've helped people buy and sell 7-8 figure businesses. Like if you're not spending $15,000, $20,000 to find out whether it's worth spending $7 to $8 million, good luck.
Yeah.
I hope you get it right. I genuinely do, because your wife is going to be pretty pissed if you get it wrong. Or husband, of course.
Yeah. So what is like the riskiest acquisition you advised on? Can you share?
Yeah, I mean, a good example that I can think of, and I think I wrote a blog post on it about 10 years, a long time ago. So I advised a South African property company that were looking to get into digital. So they were looking to buy a real estate portal in Indonesia and the Philippines. So think of Zillow, think of Rightmove, but for Southeast Asian market. And they were asking the right questions. They received the right documents so that they can see where the traffic, the visibility, where's it coming from, what's the conversion, how many agents are registered. But when we actually dug into the link profile, it was just ranking on spam. And in 2012, this is going back a long time, been doing this job for a while. In 2012, when the Penguin update came, the site tanked, and these guys were going to spend $1 million, which was quite a lot of money. Well, still is a lot. $1 million, $1 million. They were going to spend $1 million on this property portal on the basis of its value, based on its visibility. 6 months after we did the job, the visibility was 20% of what it was when we did the due diligence. So we advised not to buy the asset, and they didn't buy the asset. And I'm sure that guy will still buy me a beer every time our paths cross. So we saved him $1 million.
Yeah.
You know, that's the best $20,000 he ever spent.
Yes.
Well, and I think sometimes with this, you have to look at your industry and hopefully be able to talk to enough people to have some foresight in that industry. Because I remember 14, 15 back in the US, I was working with a company that wanted to be on that first page of Google. And we sat and we had a consultation in like, say, February. We came back, they were ready to start investing like July, and the market had changed that much. So for what they wanted to invest in February compared to what they invested in July was tenfold, because so many other people grew up in the market, started exploding into the market. and they said, we can't afford this now, but you said this, the market changed that fast in 1 year.
Oh, wow.
Well, every year that passes, it becomes more expensive to rank, because one more year of everybody investing into organic visibility. So it's never going to be cheap.
How is AI changing digital assets? Is it?
I mean, I'm pro AI, by the way. I'm not against AI. Helpful content update cleared a lot of the mess. That would be like, you can't just sit there in your mum's basement and copy and paste from ChatGPT into WordPress and think this is going to last forever. Like, the sites that got hit that were just misusing AI, good, glad they got hit. Whereas I see AI in my due diligence process as a way of cracking a lot of data very quickly. So we used to do we still do market feasibility reports for potential clients that want to enter new markets. ChatGPT will tell me the top 10 competitors in 1 second. Previously, we used to have to go look at different tools, different platforms. Does it for me now. So, but let's always remember that AI is giving you the data that I turn into your information and our knowledge. So the AI is literally just giving you, like, it's not, I wouldn't make a blind decision on what ChatGPT or Gemini spits out, but I'll happily let it do the hard lifting for me.
Well, let's go back to accounting as an example. You have the analysts that give you data. What ChatGPT does, these AIs do, is they give you that data that fast, where it would take someone a week or a month. So it's taken that role and changed it dramatically, but it doesn't think cognitively. It doesn't think rationally. So you still have to have that human factor in that as well. It's just a lot of other labor type things. It's going to affect drastically in other industries more than ours. And the thing I love about this is, like any other shiny object that's come around the last 10 or 20 years, when people chase this shiny object, they think this is going to let them make X amount more money by doing less work. That doesn't really happen in any other industry in this world, where you can do less work and make more money. It just kind of clears out the trash every time they do an update for an algorithm.
God bless the internet.
So how do you see the digital assets market develop in the next couple of years?
Who knows? Like, there are now there are probably people running custom LLMs on their own server, which is going to be very useful in a very narrow channel. But we don't even know this yet. Like, when I was at high school, the internet didn't exist. Now here we are. My children are at high school. What is the world of work going to look like for them? 2-3 years ago, we didn't have ChatGPT. Now we do. Like, it's moving so fast that, we're both lucky. We've been doing this for a long time. We've accumulated some wealth. We can take gambles, and if maybe 1 in 10 works, then as long as I'm making 20x, it's fine. But yeah, who knows where this journey is going to take us? That's the exciting part. Like, we don't know what's next.
But doesn't it make it more risky?
Well, we call certain neighborhoods, they're going to become gentrified, so the value of the property will go up, but it might not.
Yeah.
So, like, life is risky. Have you tried crossing the street in Saigon?
Yes. It's not easy.
You just got to trust your judgment. Same with investing in digital assets.
But one thing I think that you can look at it, again, as a hedge of a bet, if you will, is if you're doing things, too many people want to break rules. You can push a rule and not break a rule. So you can build things to a certain degree. And the one thing that I love about this industry, and the more people are getting into it that are business owners, and I think we're going to see some economic booms in the next 12, 18, 24 months, is those people that have an attention span that long, that don't want to wait the time it takes to build something properly. They're going to be looking for people that have properties that they can buy, and they can turn the switch that fast, so that those of us that have properties there in certain industries and certain niches, they can help them expedite their path. I think we're going to make good money in the next few years. So it's just having things that are ready there that you don't need to monetize right now. But again, that value to someone else is going to be worth more than it is to me. And I'm going to be happy for them to be happy giving me money.
Awesome.
We can do it from Saigon.
Amen. We're in Southeast Asia and they're suffering in some other part of the world. So that's beautiful.
I'm always very grateful for the life that the digital asset industry has given me. So we should never, ever stay humble.
Yes.
So any closing thoughts for our viewers?
Nothing is guaranteed in this life. Don't risk your house. Keep your primary residence for your children. Gamble everything else on digital assets. But yeah, and enjoy it. Just enjoy it.
Yeah. I mean, I think when you're buying a car, there are magazines where you got to do research for car and stuff like this. So the more you can do research, the more you can talk to people in your industry to find out about this type of company to buy from, this broker, this company like that. There are people out there that do the right things. There are people that do shady things. Try and find out who to work with that's going to be more reputable.
And do you always pay in cash for these properties, or can you actually buy them on loans?
It depends on the price.
Yeah. I mean, you can also trade digital assets.
Like barter?
Well, it's all just ones and zeros on servers at the end of the day. So I can swap you some ones for some zeros.
It's like anything else. The more valuable it is, sometimes people will take, as I tell everybody, if you want to make me the banker and let me collect interest, I'll take payments all day long.
Digital due diligence is just a professional service, like a lawyer, like an accountant. It's just a consultancy advisory service.
Yeah, but when you advise, do you actually advise on technicalities, or do you also advise on what industry you should go into, what type of asset?
Yeah, I think most of the work I do, the buyer is further down that path. They've already decided they want to enter the law firm software or whatever else, rather than, I'd love to have a wallet full of, an address book full of whales that just want to give me money to go and find new things. But yeah, most of the time for the services that I offer, they kind of know where they want to be and they just need help on which direction to take, really.
Yeah, and people pay me to build networks for them if they're trying to do things, because it's cheaper for them to do that, because I have people that are trained to do the research to bring it to me, and then we just make the final decision. That way they're paying for their time for a big part of it. They're not paying for my hourly rate for everything I'm doing. If I come in and teach them how to do it, it's a lot more expensive.
I see. But it is possible, to come to you and say, hey, I have this amount of money. I would like to buy a digital asset, but I don't know.
Yeah, absolutely. But I think you're more likely to lose than win if you're just taking, you might be better off joining a venture fund rather than trying to do it on your own, because it's very difficult to pick individual stocks, which is why we buy funds.
Yes.
There are people whose job it is to decide which stocks to go into the fund. Therefore, I'm happy to pay for their knowledge and buy the fund, not the individual stock.
So how do you get into digital asset ventures?
Your network is your net worth. So people, we come to events. It's still a human to human transaction, interaction. So I know that there are companies out there that run digital asset funds. So you can Google it. I'm sure you can find them. Do your due diligence on who you're giving your money to.
Yeah, exactly. That's another due diligence you have to do.
A lot of the time, my most successful investments have come off personal recommendations from friends, peers, colleagues, because the trust is already there.
What events do you recommend to go to network with people who are in digital assets area?
Depends on the level that you're at. And as someone that spent most of my career in the U.S. and been over in Southeast Asia now for the last 2 years, some of my people in America are going to hate this comment, but I have too many fake gurus in the U.S. I've been welcomed into this community with open arms at a pace that just you wouldn't see in the U.S. And a lot of people that are doing this in Asia and Europe are decent people that are willing to be forthcoming, willing to, share information back and forth and actually share information, not just looking for a one-way road. So if you can, I would say come to Southeast Asia, because the community between here and Europe is a lot different than the US.
We're not quite as brutal as Americans. We're from the Socialist Republic of Europe. So,
Yeah, not so much. Business is business.
Well, but this is why the US market is so appealing, because business is business. And that's where, the marketing budgets are bigger, the asset valuations are bigger. But the way of doing business is a lot colder. I find it's my own personal opinion.
Well, and you have too many people that get into this industry at some way, shape, or form that really, they know one thing and now they think they're a guru, and they're really burning the bridges with a lot of people. I mean, I rarely am going to deal with a client in the US that hasn't been burnt 1 to 3 to 5 times.
Really?
Yes. So they are once bitten, twice shy. So that's why, again, you learn to do the research, you learn to do some of these things. And part of our business model is finding businesses that have hired some people that knew what they could do this part right, but this part they're falling on their feet, they're on their face. So when you can fix this part, now you're a hero because you've gotten them something nobody else could do. So the more you can understand the pros and cons from every project, looking at things from a holistic point of view, and you can be honest with people. And if you think it's going to take 3 months, I tell them 6. If I think it's going to take 6, I tell them 12. When you under promise and over deliver, that sets you apart from the people that just want that money to come in, hoping you get paid the next month and the next month, when they really don't know how they're going to deliver that service. So it's, again, being able to operate a business where you can sleep at night. You realize you don't worry about taking advantage of anybody. You worry about their benefits more than your own. And I think that's what creates some of us, or separates some of us from other people, is just because we do worry about other people and we make sure that we are giving them something more than what they're paying for.
It's my personal brand. My word is my bond, or whatever the saying is. So I wouldn't want somebody to have a bad taste in their mouth having had experience with myself or my businesses. At the same time, I don't always get it right. I've said don't buy it and the value's gone up. I've said buy it and the value's, you're not perfect. But as long as you are presenting the data and your methodology and your way of thinking, then that's all you can do. It's still up to you as the buyer to make the final decision and write the check. Like, I get paid whether the answer is yes or no.
Yes.
So
that's why you have that disclosure when people are trying to invest money. Past performances and are indicative of future results.
Absolutely.
Yes, exactly. You have to cover yourself, right?
Yeah, well, just common sense, really.
Yeah. And is it difficult to rebuild trust for customers who were burned in the past?
At some, you're never going to, because they're always going to be skeptical. Others, it's taking the time to communicate, be proactive, not reactive, and show them that the wins that you're doing. Because anytime someone's skeptical, if they can see that I'm putting ice in my glass, if you like ice with water or whatever, just doing the little things to start to build up baby steps. And as soon as those baby steps turn into, because a lot of times we have to crawl, we have to walk, we have to run. So we have to get to that point. And by the time I have some attorneys I've known for years, and we just started working with a few years ago in the US. And the one, I told them, this part we can do quick. This part's going to take a while. This part we did in half the time. This part, it took the time I said it would. And at one point he was skeptical about it. And then all of a sudden, a few months later, he's like, well, you delivered what you said you were going to do, so I guess I can't complain. And I'm thinking, this made you a crap ton of money. This isn't going to make you much, but you were focused on this, and this one you're loving. But everything is relative, because this was important to him. This was important to his partner.
Yeah, you also don't know what's going on behind the curtain.
Oh, yeah.
So.
Also, thank you so much, guys, for coming today. This was a great discussion. And if anybody's interested in digital assets, follow Gareth, follow Glen on LinkedIn. Don't hesitate to reach out, and subscribe to our Odys Podcast for more knowledge-packed episodes like this one. Thank you so much for today.
Thank you for having us.
Enjoy the rest of the conference.
Thank you.